Morning traders, I'm Greg McKenna. Welcome to Markets Morning. It is the 28th of November 2018. No video of me today, just of the screen that I'm sharing with you. I'm sitting in a chair and I can't get, I'm on the road, I can't get the video to work effectively on the laptop at the moment. So apologies for that. But an interesting night last night. We did see European stocks lower. We saw US stocks under pressure initially before rallying, and they rallied despite this aggressive tweet from President Trump, from comments from Larry Kudlow that suggested that there is still some way to go. But what traders did was they grabbed onto the fact that Kudlow said that at least they were talking the Chinese and the US, and President Xi and President Trump are having dinner at the G20. But the key thing, I guess, is that this GM thing has really thrown or brought front and center once again everything that President Trump has been railing against in his first 2 years in office. Mexico and China did not lose jobs, America did. So we need to keep an eye on that. Have a look at Markets Morning, the written piece this morning, because I've got a link to the full transcript of the interview with the Wall Street Journal, which we talked about yesterday as having come out after market. Markets did remarkably well given the increase in trade tensions, but they want to be bullish, and that does set up a risk. But of course, if there is a deal, and I wouldn't write a deal off, once again, I've explained why in Markets Morning. Have a look at that, and you'll see what I'm thinking. But before I get into the chart today, I just want to talk about a couple of things. This is obviously the DXY, and the DXY is back up above 97 this morning, 97.40 or thereabouts, and coming up towards the top of this pattern. A daily break and close above 97.70 would be bullish. A weekly break and close above 97.70 would be uber bullish. I'll come back to currencies in a minute. What I want to talk about at the moment is I want to talk about oil and inflation, oil and interest rates. Now, the US 2s and the US 10s are hardly moving at the moment, 283 and 306. They've been, around those levels for a week or two now. It doesn't matter whether stocks go up or down, they hold firm. And last night, Rich Clarida, who's the vice chair of the Fed, did say that the balance of probabilities are more on the positive than the negative side in terms of the US economy, and thus suggested that more Fed hikes are coming. That's why the US dollar caught a bid. That's why the DXY is up where it is. That's why Euro's back under 113. Obviously, the pound got belted because of Brexit concerns. But what you've got now is he also did really highlight the fact that the Fed's data dependent. The headline for his speech was data dependence in US monetary policy, or words to that effect. So what that does is it opens or gives the market room to exercise its bearishness if the data print weak. And it's worth noting that the CC score for America, or the US I should say, is now negative again. But what have we got here? We've got break-evens. This is expectations about inflation. If you are a bond trader and you think inflation's going up, you buy indexed bonds. If you are a trader and you think inflation's going down, you buy nominal bonds. They tend to be the best performers in those kind of environments. Not perfect, of course, but what you've got here is you've got oil falling with break-evens, which tells you that the market is thinking that this oil market funk for inflation has negative consequences. So harder for the ECB, harder for the Bank of Japan, harder for the Fed, harder for the RBA, harder for all the other central banks. Speaking of which, we hear from Adrian Orr, the RBNZ central bank governor today in our time zone, and then tonight we hear from Chairman Powell. But one thing, I guess, that I have a Keynesian bent when it comes to looking after those in need. I guess most Australians would agree with that we've got a balanced economy where we have a good social net. So to that extent, I'm a bit Keynesian. But when it comes to my underlying beliefs of what drives the economy, it's all about money. It's all about the growth of money. It's all about the velocity of money. When I was going to do my PhD, before my wife intervened and said, "Don't be stupid," I was going to do it on this very topic with regard to the shadow banking. This was pre-GFC, but Lisa told me not to be stupid. We did have young kids. But anyway, what have we got now? We've got the monetary base is now starting to shrink. And look at when the last time it happened. It happened in the 80s, in the 90s, at the beginning of, or just before the beginning of this century, a couple of years later, and then just before the GFC. Now, many different things can happen. Obviously, that got inflated because central banks did it. But with the Fed shrinking its balance sheet, with the ECB about to finish, with the Bank of Japan making noises that it too will eventually finish, what we've got is money coming out of the system. And that, to me, speaks of slower growth. We're seeing that in China. We're seeing that in the OECD forecast. And so slower growth does seem to be coming down the pipe. So it's no surprise, really, if I look at it, that copper, can't rally and is under a little bit of pressure. But I'll come back to that. Let's just start with currencies now, and then we'll come back. Thanks to everybody who filled out my survey, by the way. Sorry, just looking for euro here at the moment. It's got some really good responses. I've got a clearer understanding of who you are. 50% of you are viewers and readers, have been trading for more than 5 years, and 20% say you're grizzled pros, which is really interesting. So that's really cool. But looking at the euro today, it got dragged down by Clarida's comments. It got dragged down by sterling. It does look to me like it wants to test. Yesterday, I think I said it was 112.60, 65 is the trend line. Now it's down in the 50s. It does look like it's rolling over. It does look like it wants to retest that 112 sort of figure 20 region. If that holds, no need to get too bearish. If that broke, then I'd be back looking at the 108.20. Now, when we talk each day, there's a clear desire from readers and viewers for a little bit more clarity of exactly what I'm doing. This is not a signal service, but I will think about how I'm going to introduce the narrative, if you want to call it that. So, my core views, which are, Euro 108, maybe Euro 103. Sterling, basically going to depend on Brexit. Aussie, probably more down than up, those kind of things. But stocks, S&P 500 on a sort of a 6 months, 1 year basis, down at 2000 to 2100, those kind of things. I'll probably start to put those once I get the subscription service running. I'll probably start to put those at the bottom of the daily note in the same way that Gartman does. Anyway, so that's where we look at the moment. Weeklies, as I say, 109.85 is your break if you take out 112.13. So keep an eye on that. I'd call it a 112 break, and the way that I trade is that I use I wouldn't sell the break unless it was broke 111.87. That just tends to be how I go. Dollar yen getting hosed on my lifestyle dollar yen position. It does look like it wants to come and test 114.5, doesn't it? What's Chairman Powell going to say today? Is he going to be bullish, or is he going to be hawkish or dovish? Based on Clarida's speech, he's going to clarify that the Fed is data dependent. That opens the room for interpretation from the market, but it also means that they're going to hike in December. Sterling's dropped through here. That suggests a test of 126.60 to 126.90. That has to hold. 120 is the level after that. What have we had? If you think about it, my system, simple system, and I might start mapping these out at the end as well in one of the higher tiers. Basically, if 126.60 breaks, the 120 becomes the target on that. Equally, if 133.20 breaks, and you're talking about sort of 137 and maybe even 142. But Theresa May looks like, there's too much opposition, or there's growing opposition. The people seem to want it. The people have fatigue for Brexit shenanigans, and the economy will suffer. Businesses got fatigue too, but we'll see what happens. Here in the Aussie, iron ore's getting belted, coal's getting belted, copper's down. In Markets Morning, the written piece, I shared the relationship long term and only directional, certainly not anything in terms of if the Brazilian real moves X%, the Aussie will. But interesting nonetheless that Brazil has fallen off a cliff. And that's because of iron ore, I think, amongst other things. But these last two candles here for the Aussie do give you a clear signal of where it's going. Buyers have been chased back both times by the sellers. So we'll see where that goes. I'm short Aussie at the moment. In terms of dollar CAD, tested again, couldn't get through. A break of 133.20. So A break intraday, I get 25% of the position long for the run to 135.20. A hold on close gives me 100% of the position that I want, but 133.20 has to give way before we. Sorry, last night's high has to give way before we get up and charging. So that's really interesting. Oil was down and up. It found the support in the same kind of region that it did the last two nights. Kiwi did really well last night. The Kiwi was up 0.3%, whereas the CAD, so dollar CAD was up, but the CAD lost about 0.3%. Still looks like it's rolling over, but you'd have to say while it's holding above 67.5, the bulls haven't completely given up, though. The way that I would use my MACD in terms of this move stalling and those kind of things does suggest lower at the moment. But as you know, Kiwi is one of my least favorite currencies on the planet. I'm hopeless at it. In terms of the yuan, because we've got to watch that, particularly as we head towards G20 and above. This is the weekly chart. The dailies are similar. We've got this broad and mild uptrend. We've got 698 to 7 as the key level to watch. A break of 698 or 7 gets us up at 725 pretty quickly. In terms of commodities, gold got hit by the rally in the US and the tough talk from Clarida. I didn't really think it was that tough, but that was the way it was perceived. They're not the biggest moves in the world, though, are they really? 0.3% increase in the DXY, 0.3% fall in euro, 7 or 8 bucks, fall for gold. So support still in the sort of the 1200 to 1205 region, slipping up from 1195. So that needs to hold then 1195 if it's going to rally. If stocks are rallying, it makes it much harder for gold. And if dollar yen's selling off, it makes it really hard. Dollar yen's rallying makes it really hard for gold. Pardon me. Silver looks like it wants to come back and retest the bottom of this range. I was of the view that potentially silver might get up and through 15 bucks, but gee whiz, it looks like it wants to retest the lows here. These are levels not seen in some time, and then we end up focused over here. Let's see if I can pick up that fractal. So I've got 1389 as the kind of key level. That says 1373 over here, even lower. What's that? 1363. So we could see it in the mid 13s pretty soon. In terms of copper, we talked about that. That looks like it wants to come back and retest the bottom of this little wedge. That would be 267. 267.5. So keep an eye on that. Could be another 4 cents in that. If that was to break down, that would be a signal. Aussie would probably struggle in that environment. Brent and WTI both see this region here looks like it's trying to be a bottom. Now we've seen this before. If that low there, we're still inside. We are still inside that big fall, 58.41. You get it down through 58.40, then all bets are off. Otherwise, it does look like it's trying to build a base to at least test, the bottom of that, which is 61, 69, and potentially up to the trend line. So I'm more constructive on Brent and WTI. Similar story here. We've got 3 days lows in roughly the same region, starting to get a stall in the MACD. First target, obviously, that fractal 52.75, so it's not far off. And then the full retracement, remember it was 54.08. It's probably a little bit lower today, so it's about 53.90. So somewhere between 53.80 and 54.10, WTI runs into resistance. If we look at stocks now, NASDAQ had a decent day. That's a nice little rally. Low, run. So on that basis, then we'd have to drill down and say, well, where can it go to? It can easily go to 6856. By the looks of things, 15 moving average 6744. I'm not bullish, by the way. This is just the way the charts look at the moment. The medium-term downtrend on the dailies is still down. If I go over here and we look at the 15.7052, so the 15-week moving average is below the 30-week moving average. That is a bearish cross. We'll see where it finishes at week's end. So the downtrend is there, but we're having a counter trend rally just at the moment. In terms of the S&P 500, 4 hours, you could see how important this level is here. If it can get up through 685 or thereabouts, it can easily run potentially another 50 points. That rounded bottom, that's on the 4 hours. On the dailies, you got a similar story, So we didn't exactly get down to 2600, but that's the Maginot line, as I wrote in my written piece today. We've got 2690 as the key there, and then you could run to 2733 or there. So if we have a look at the weeklies and we see where the moving averages are, 2761. So below, again, the 15 is below the 30. That's a bearish cross. We'll see how it looks at week's end, both for it and the Nasdaq. So you can't call that yet, but the last time it crossed was all the way back here, which was about 2000, I think. In terms of the local market, there's a clear reservoir of support down here in the 5660 odd region, 60-70 region. We've got resistance here, 5765, so you've got 100 points to play with. Bulls will probably have a crack today, I would have thought. I would, if I was having a punt, just on the basis of the improvement in the US. The downside's been tested and found well supported. So let's go looking for where the sellers are. That's the kind of the thought process I'd be going through. In terms of the DAX, and then I'll quickly do the Bitcoin, and I'll leave you be. So we've got resistance here from this trend line at 11.4, and then it's 11.7. If you can get up and through 11.7, the outlook changes. You could argue that's a double bottom, but I can't argue it yet. I'd want to see it up and through these bits here. So 11.7, it gets to 11.7, I guess we start to get bullish. On the DAX, we start to think about Santa, I guess. We'll see how that goes. Bitcoin found a little tiny bit of support. That's not the chart I was looking for. Sorry about that. Found a little tiny bit of support. Oh, there it is. It's up there. Last night. So still, this 3471, it did go under that, not when MT4 was open. So on that basis, this is where it does look like it's building support. If it falls through 3470, call it 3450, call it 3400 if you want. They're big spreads in Bitcoin land. Then you're looking at a move to 3,000, which has been, remember a long time ago I said if 6,000 breaks it goes to 3. This has been using my proper first ever system, but 3,000 is for me a target, and then below that 1,800 or something like that. Right, that's it from me. US GDP second readings out tonight for Q3. We've got construction work done in Australia, which is the first partial for GDP here. We've got Jerome Powell talking, which is the key highlight. So keep an eye on that. That will move markets. And then, of course, any more discussion of President Xi and President Trump will move stocks as well. So have a great day, and I'll be back tomorrow. Bye for now.